Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames and also take a look at market cipher. I just wanted to start saying thanks for the great response to that last video. It was non-Bitcoin related. The intro turned into the whole video, but did get a good response with a lot of views, and I'm probably going to make a few of those every now and then, but this will still be mainly a Bitcoin channel. So thanks again, and let's get into the charts. So let's start here on the 2-week time frame. The previous video, we were still on this candle here. We did just open this new 2-week candle this week, and we were looking for Bitcoin to close within this order block, or at the very least hold this golden pocket area when looking at this retracement, taking the fib from the 29k low to the 69k high. We did end up closing the 2-week candle below this order block and the golden pocket, so that is bearish. It's showing that this order block acted as resistance. These order blocks are areas of supply and demand. It basically shows a pause in the market. So in a strong uptrend, the sellers stepped in here, but there were also buyers. So time was spent in this range, and therefore more volume was seen in this area. So it becomes of interest later on, and these areas can act as support or resistance, and quite often price will come back to these levels to test them when searching for liquidity. So it did come up to this level and it did act as resistance, and we got pushed back down. Now I have added this possible triangle pattern here with these dotted lines. We have these 2 points on the bottom and 2 touches on the top. I would like to see one more touch on the bottom to confirm this trend line, as we could possibly come down to this blue trend line, which is this parallel channel, and this triangle may be redrawn on confirmation of a second touch point and a possible bounce. But something I'm keeping an eye on, if we do confirm another touch point here and bounce from that area, then we can look at the measured move of this triangle for either direction. And pulling up the VPVR now, the amount of volume traded at certain price levels, we did see a spike here around 48k. That's where we got that resistance, and we've been pushed back down to this next area of support on the VPVR around 39k. So we could spend a bit more time within this triangle with these support and resistance levels. Looking at the stochastic RSI, we do need to get above this 20 level where the white dotted line is, to be a bit more bullish on a push higher. Looking at the RSI, we do have this blue box marked out around a 46 level. This is a key level I've marked out, just looking back in the history of Bitcoin during the 2011 bear market here. Once we broke below this 46 level on the RSI, we did get a decent capitulation. This is actually a 50% drop here. We spent time below this level, and it indicated the bottom of the bear market. We see that again during the 2014-15 bear market here. Once we broke below the 46 level on the RSI on the 2-week time frame, we had a decent capitulation, again a 50% drop at least. We spent time below this level as we bottomed out in the bottom of the bear market. Reclaiming this level initiated the next bull run. And 2018 bear market here, we saw it acted as support here on these dead cat bounces. Eventually we broke that level, had a 50% drop again, and we bottomed out in the bottom of the bear market, and reclaiming it started the next bull run. We also did it during the stock market crash briefly here, also more than a 50% drop. So that's why I'm watching this level with our current price action. We can see we came down to it a couple of times here, similar to 2018 bear market, got these bounces and playing out what could be a dead cat bounce here like in 2018. And if we do break below this level on the RSI, it could indicate a decent drop. Previous ones were around 50%. It doesn't mean it has to be the same. Obviously this bull market didn't have a massive blow off top, so the drop percentage could be different, and we could use the measured move of this triangle but we won't look at that until we confirm another touch point on the bottom here. But just something to be aware of. If we do break this line, we could expect a big drop. And down to the weekly time frame now. We also have drawn in this parallel channel with these yellow lines. We have several touches on the top and several touches on the bottom. This is a confirmed pattern, but we are still watching that triangle pattern as well as this pattern. And when looking at it in this way, it does seem to confirm this trend line on the triangle, as we have had a second touch point here after touching the top of the trend line. We do also see some weekly order blocks here. We have this order block from this green candle in a downtrend, and also from this green candle in a downtrend, this higher order block, which did act as resistance on this attempt higher. We got an SFP here, which is a swing failure pattern when we wick above the previous price action, but the candle closes red. It can indicate a turnaround. Also with this candle, we wicked above the previous price action, indicated a turnaround. It's not a 100% signal, but it does play out quite often. But we did close this previous week candle inside this order block. This order block was previous resistance. We're looking to turn that back into support. Currently we are below this order block, but we haven't closed this weekly candle yet. So if we can climb back up here and close the week inside this order block above 41.9k, that still allows for that potential that this order block has acted as support. And again, we look at the bodies of the candles when using these order blocks. Looking at the weekly EMA ribbon now, we did close below this ribbon with the previous week candle, so that is bearish. This ribbon is still trying to flip with the yellow smaller moving average coming down and eventually crossing the red higher moving average. You can see it starting to come down here. And in previous bear markets, once this has flipped, it did indicate continuation of a bear market. And obviously the bull market tends to stay above this ribbon during the whole bull market. And we see once we broke below this ribbon, and it did flip with the yellow going below the red, indicated continuation of a bear market and one final capitulation. And also with that resistance at this order block from this previous candle, it does look similar to 2018, where all of these dead cat bounces got resistance on previous weekly order blocks. We see the next dead cat bounce here got resistance on this order block from this red candle in an uptrend. The next dead cat bounce here got resistance on this order block from this green candle in a downtrend. And this dead cat bounce here got resistance from this order block from this green candle in a downtrend. Looking at the stochastic RSI, it's starting to come down here. We also have this blue box drawn on the weekly time frame on the RSI between a 50 and a 58 reading. Above this can indicate bullish price action on a macro scale, and below it can indicate bearish price action. And just to show that over Bitcoin's history here, we can see in the 2014 bear market here, we lost that level on the RSI. It acted as resistance on the dead cat bounce. We spent a lot of time below it as we continued the bear market. On reclaiming this area, it initiated the bull market, and this area acted as support on all the pullbacks. The 2018 bear market here, we see a similar thing. Once we broke that level, it acted as resistance on all the dead cat bounces, and reclaiming it started the next bull run. And that's why it's significant here. We did break it back here in December of last year, and on this bounce it has currently acted as resistance like those previous dead cat bounces during the previous bear markets. And this has been confirmed as we have closed the previous weekly candle below this area. We needed to get back above it like we did on this occasion. We came back and tested it for support, and we broke back above it, and it indicated higher prices. The other thing we're watching is this weekly Ichimoku Cloud in green here and red. This cloud can act as support on pullbacks. The thicker the cloud, the stronger the support. But it has been interesting watching this because we have been trapped inside this cloud for quite a while. We did get to the top of the cloud here, it acted as resistance, and we got pushed back down. And now we have come to the bottom of the cloud. And to lose this cloud would be quite bearish. I would need to see a weekly candle open and close below the cloud So just looking at the bodies of the candles completely below the cloud. We do also have the Bollinger Bands pulled up here, and we see when these Bollinger Bands start squeezing, it can precipitate a volatile move. Doesn't indicate the direction, but does indicate that a big move is coming. The tighter the squeeze, quite often the bigger the move. In the 2018 bear market, we saw that they started squeezing together. They got extremely close here as price was squeezing, and then did indicate a big move coming. They dropped 50% to complete the bear market. And going down to the 5-day time frame now, we've been watching this time frame because these order blocks seem significant, and they're a lot more clearer than on the daily time frame. We can see this order block acted as support here, and this higher order block from this red candle acted as resistance several times. We do actually close this 5-day candle at the end of the day, and looks like so far we are below this order block. To be able to close back inside this order block, we would need to close above 41,860. Otherwise, we may spend some time testing this lower order block between 38.2 and 40,000. We have another fib retracement level drawn in here, taking it from the 33k low to the high here. We see on this pullback that golden pocket area is between 38.9k and 38.3k. You could draw it from this wick also, and that would show the golden pocket is where we wick down into. But personally, I do like to use the overall low and the overall high. So we could possibly come down and test this golden pocket, perhaps a wick down to this trend line from this parallel channel in yellow, but still close inside this golden pocket. And if it acts as support, we could expect a bounce back to the upside. Also looking at the Bollinger Bands, but on the 5-day time frame now, we do see how much it is starting to squeeze. And this range is between 36.8k and 46.5k. So this is also indicating that we're possibly going to see a volatile move soon. And again, also in that 2018 bear market, we see how close they started to squeeze here. And we had that 50% drop. And again, it doesn't indicate direction. They did squeeze here quite tightly and indicated a volatile move, this time to the upside. And down to the daily time frame now. In that previous video, we were around here somewhere. We did have this triangle pattern drawn. We had a fake out. We came back into the triangle. We mentioned when we have a failed breakout, quite often indicates a bigger move in the opposite direction. We were looking for this 42k area to hold here and act as support, as we did see that spike on the VPVI in that area. And I said, if we lose this area and break this triangle pattern, I'd expect us to come down to the next spike on the VPVR around 39k. And that's pretty much where the price has gone. So this is the key area to get back above in the short term, back above 42k. We do also have all these daily order blocks, but there are quite a few, and that's why we're looking at that 5-day time frame. But we did see a doubling up here of order blocks from this red candle and also from this green candle, and this seems to be the area that also acted as support. But looking at some moving averages on the daily time frame now, we're watching this 50-day moving average in yellow and the 200-day moving average in red, and we're looking for that 42k area to hold, and that would have been that 50-day moving average. Unfortunately, we did break it, so that is quite bearish. We do need to get back above this area and attempt to move higher if we are going to see a golden cross on the other side, where the yellow crosses the red line, like we did on this occasion. That could indicate a bigger move to the upside. But as it stands, we are below that 50-day moving average, and that golden cross isn't on the cards for the time being. And just in that 2018 bear market, we can see once we got that death cross, we weren't able to get the golden cross on the other end until the bottom of the bear market. And these dead cat bounces also got resistance around that 200-day moving average, quite similar to our previous bounce here. We are also below the daily EMA ribbon again, and in bullish markets, we would have expected to get a bounce off the top of this ribbon once the yellow moving average was on the top. But we can see it's starting to flip now. The yellow is crossing below the red. So with the same logic, On a bounce to the upside, we would expect resistance on the yellow moving average, and currently that's at around 42,400. And we can see it also coincides around that 50-day moving average, so we could possibly see a rejection when these eventually meet. And again, that's where we see that spike on the VPVR around 42k. Looking at the stochastic RSI, we do need to get above this white dotted line, the 20 level, to give some confidence that it's going to try to push higher. But we do see the RSI has been coming down here. Quite often the RSI will come all the way down to this dotted line, which is the 30 level on the RSI. And we generally zigzag between both of these dotted lines. So I think it's likely we come down to this trend line and also this dotted line on the RSI. We could possibly look for some bullish divergence at the bottom here before we expect a bounce. And over to market cipher, this is on the 4-hour time frame. We do see the money flow deep in the red here. We need to see that curve around and come back into the green. In the red, it shows money's leaving the market. In the green, money's entering. We can see once it does flip green, it is a good indication that we are going to push higher. And again, the higher term time frames are more reliable than the smaller term time frames. We did just get this green dot confirmed here, so we have to see if this can carry on and get some momentum, perhaps complete this W pattern and look for more of a bounce. The 12-hour has had a couple of green dots here. This is generally a bullish sign, but we do see that money flow has been curving down from the green and has just started dipping into the red. Looks like we're getting close to a green dot on the daily time frame. The money flow has dipped into the red here though, and the green dots are more reliable in the green money flow. We see after this green money flow started going into the red, these green dots weren't as reliable. The 2-day had this red dot, it got confirmed, and we did come down here, and we stayed in the red money flow this whole time on the 2-day chart. And this blue wave looks like it's got a bit more to go on it. The 3-day also had a confirmed red dot, and the blue wave looks like it's got a bit more still on it. So these higher term time frames seem to be saying there's a bit more to go on this move to the downside. These 3-day red dots are important here when looking at the 2018 bear market. Once we entered the red money flow, these red dots on the top indicated the top of these dead cat bounces. And the weekly time frame now has got a red dot. It's not confirmed yet, but we also have a blood diamond here. And actually Bitcoin has never had a blood diamond on the weekly time frame. These blood diamonds can indicate a big drop coming. The higher the time frame, the bigger the possible drop. So this is quite a big warning sign here. To get rid of this blood diamond, we need to close the week above 40,500. If we go on to the 2-week time frame, we did actually have a 2-week blood diamond here. That was actually the stock market crash where we had more than a 50% correction. It doesn't have to play out the same, but it is a warning sign if it does get confirmed. But looking at the 2-week, we did have this green dot. It got confirmed. Now we do have a red dot. And we were mentioning we need to look out for this red dot, as in the 2018 bear market, we also got a green dot. It was a dead cat bounce. We got that red dot in the following 2-week candle. And once it was confirmed, it indicated continuation of the bear market. And the 3-week time frame now, there was a green dot here at one stage. It has disappeared currently. And we were saying if we can get a green dot and it gets confirmed, that would be different to the previous bear markets. This in 2018, we saw the blue wave came all the way down, and that green dot was the bottom of the bear market. Also in 2014 bear market, once crossing that zero line, the blue wave came all the way down, and the green dot was the bottom of the bear market. And we will actually close this 3-week candle at the end of the week. So there is still time for a green dot to appear and it get confirmed. But we'll have to see how that plays out on the 3-week time frame and also the weekly with that blood diamond. There is also a blood diamond here on the 6-day time frame. This won't be confirmed until the 19th of April. And this is comparable to that weekly one. But looking back in history, we also saw a 6-day blood diamond in the 2018 bear market after this dead cat bounce. And that was about a 20% drop from that blood diamond. So I think that's about all. Hope you enjoyed that analysis. Short-term time frame here, we'll be watching this W pattern on the 4-hour time frame. And again, for this to be confirmed, we need to close above 41,350. And this would have a measured move back up to 43,400. But we'll have to see how that plays out. This is a long weekend and the futures market is closed for Bitcoin. So I do expect a little bit of games with volatility. We might see some big wicks in both directions. A lot of traders choose not to trade over the weekend because it can get quite volatile. And the more reliable moves tend to happen during the weekdays when that futures market is open. So thanks for watching. I hope you enjoyed that. I'm Bitcoin Mamo. I'll see you next time. Bye.